Hello, Scott Bear here at Mortgage Pro, and this video is powered by your Realty Pro broker, and this is what is new this week. Some very interesting news came out in Inman News on June 7th regarding the qualified residential mortgage underwriting standard. Now, I've mentioned this in the past, but I'll mention it again. The qualified residential mortgage is an underwriting standard that six very large federal agencies are trying to pass in its current state. And part of the standard dictates that all loans that are originated by any lender would have to be at least a 20% down payment and very stringent debt to income ratios. That's a big deal. Most mortgages do not fall within that standard. And if they don't fall within that standard, the legislation currently states that you would, as a lender, have to accept a 5% credit risk for all loans that don't fall within that standard. Most lenders are not going to want to originate mortgages that don't fall within that standard. I can guarantee you. So right now, 160 plus members of the House of Representatives and 40 members of the Senate, bipartisan, mind you, and numerous interest groups that are typically antagonistic with one another have all unified forces and written against the six federal agencies that are currently trying to pass the qualified residential mortgage in its current state. Very big deal. Huge amounts of opposition. They're basically saying that the three senators that were responsible for this particular portion of the Dodd-Frank Act, which is where this whole interpretation for the qualified residential mortgage is coming from, have stated that the current interpretation by the six federal agencies is extreme and directly contradictory to congressional intent. That's a huge statement. But that's what they're saying. They're saying that if you don't take out any contingency regarding down payment out of this legislation, you're going to have a serious fight on your hands because everybody is against it, and as well as am I. It would be hugely devastating to the industry. In fact, CoreLogic stated, they're a real estate data and mortgage data company, stated that all mortgages that were originated in 2010, 39% of them would not fall within that standard today. That's a big deal. Can you imagine 39% of all mortgages that were expected to close during any given year just falling out of the sky and not being originated? That would be devastating for the mortgage industry. Not to mention any job industry that has any shirt tail relationship with any type of real estate. That would be extremely devastating. So I'm very surprised, or will be very surprised, if the legislation in its current state would pass because of so much unbelievable opposition. So I'll keep you posted if I hear anything else, but this is definitely very big news and actually good news. It's good to see that the industry is standing up for itself and trying to fight for its life, so to speak. So don't forget, you cannot afford to use anybody but a professional in this industry, especially during these times. So go with a pro, Realty Pro. And we'll talk to you very soon. Have a fantastic weekend. All right, bye-bye.